Assalamu alaikum. Welcome to my YouTube channel. Let's solve the example given in part 1. I have already prepared the format. So let's begin. January 1, Ali started his business with cash rupees 50,000. Here we have cash account and capital account. How? Cash is an asset. So we have cash account and we have a capital account because we received amount for starting a business. The amount we receive for starting a business is termed as capital. So here capital is increasing. So when the capital increases, it is credited. And the cash account will be debited because the value of an asset is increasing. So it will be debited. We can write it in the format as, firstly we will write the date, that is January 1. Then we will write the account to be debited, that is cash account. Then in the next line with some space we will write the account to be credited with 2. So we have cash account to capital account. Then we will write the amount to be debited, that is 50,000, and amount to be credited, that is 50,000. So in this way our first transaction is recorded. Now we have January 4, purchase goods for cash rupees 7,000. Here we purchase goods, so we spend the money. So the value of cash is decreasing, which is an asset, so it will be credited. Now, but the goods are increasing, which are also an asset. When we have goods, so we have the account associated with the activity. When there is any activity of good, the account will be named in accordance with the activity performed with goods. So we have purchase account, which will be debited as goods are increasing, which are an asset. So purchase account will be debited and cash account will be credited. Let's record it in the journal. Date is January 4. Purchase account will be debited and the cash account will be credited with 7,000. Let's see the next transaction, which is January 5, sold goods for cash rupees 5,000. Now goods are decreased as we have sold them, but in exchange we received cash. So the value of cash is increased. So cash account will be debited and the account regarding goods is sale account, which will be credited as its value is decreasing. So we will write January 5 cash account to sale account. The amount to be debited is 5,000 and the amount to be credited is 5,000. Let's move towards our next transaction, that is January 7. Purchase of goods from Azan on credit worth rupees 4,500. On credit means on advance. That is, we have purchased goods without paying money and we owe money to Azan. Azan is the supplier. The account made with supplier on credit is termed as account payable, which is a loan or liability. When value of loan increases, it is credited. So account payable will be credited, and the second account we have purchase account. The number of goods are increasing. It means value of an asset is increasing, so it will be debited. So we can write it as January 7 purchase account to capital account worth rupees 4,500. The amount to be credited is 4,500. The next transaction we have January 12th, sold goods to Rahman on credit worth rupees 2,000. As I told earlier, on credit means on advance. Now Rahman is our customer. We have sold goods to our customer on advance worth rupees 2,000. The account made with customer is account receivable, as we will be receiving money from the customer. Account receivable is considered an asset. So value of account receivable is increasing, so it will be debited. Sold goods, as goods are being sold, the number of goods are decreasing, so its value is decreasing, so sale account will be credited. So we can write it as, the date was January 12th, account receivable to sale account worth rupees 2,000. Now let's see the next transaction. That is January 16. Paid wages amount rupees 4,000. Now wages is an expense and there is an expense. It is always debited. So we will have wages expense account, and as we are giving wages, our cash is decreasing, so it will be credited. So we can write it as January 16 wages expense account to cash account. The amount to be debited is 4,000. The amount to be credited is 4,000. Then we have the last transaction of the month, that is January 22, received commission rupees 2,000. Now commission is an income. So when we receive an income, it is credited. It is considered as capital, so it is credited when its values increase. So commission account will be credited, and as we received cash, the value of asset is increased, so cash account will be debited. So we can write as January 22 cash account to commission account worth rupees 2,000. So this was the solution of the given problem, and we have prepared journal entries. In this way, journal entries are prepared. If you have any question, you can ask me in the comment section. Let's get back to our presentation. We solved this example. I hope you got it. In the next lecture, we will explore more information about accounting and we will solve another daily life example with new situations for better understanding. I hope you all understood. Thank you.